Imagine this. You're checking your portfolio. Stocks are flying. Your 401k looks amazing. And then, boom! One single announcement from the Federal Reserve flips everything upside down. That announcement? A September interest rate cut. And it could either skyrocket the market or trigger the next crash. In the next 15 minutes, I'm going to break down exactly what's going on, why this decision matters, and how you can position your investments before it's too late. Part 1. What's happening right now? July's inflation came in at 2.7%, slightly below expectations. The markets loved it. S&P 500, Dow Jones, and NASDAQ all hit record highs. Rate cut expectations jumped to 94% for the September Fed meeting. Just one day earlier, it was 86%. This tells us one thing. Wall Street is betting heavily that the Fed is going to cut interest rates for the first time in months. Part 2. Why the Fed's decision matters to you. Lower interest rates make borrowing cheaper. Businesses expand, stocks rally. Consumers can refinance loans and mortgages at lower rates, more spending power. Investors benefit as stock valuations rise due to cheaper capital. But there's a catch. Cutting rates too soon can reignite inflation, which means the Fed could have to hike again later. And that's when things can get ugly. Part 3. 2 possible scenarios. Scenario 1. Fed cuts rates in September. Immediate market rally. Tech stocks, growth companies, and high-debt firms surge. Housing market could heat up as mortgages get cheaper. Risk. Inflation could creep back above target. Market correction later. Scenario 2. Fed holds rates. Steady short-term market disappointment. Small dip likely. Long-term. Inflation stays under control, giving markets a more stable growth path. Safer for long-term investors. In both cases, there are winners and losers. Which one are you going to be? Part 4. What the market is telling us right now. AI-driven trading is more bullish than ever. Algorithms are pricing in aggressive rate cuts. Human investors are cautious, worried about geopolitical risks, trade tensions, and a potential inflation rebound. This creates a tug-of-war in the market. AI optimism versus human fear. And when optimism and fear collide, volatility is guaranteed. Part 5. How to prepare your portfolio. If Fed cuts rates, growth stocks, tech sector, and consumer discretionary could outperform. Consider rotating into high beta stocks for short-term gains. If Fed holds rates, defensive sectors like utilities, healthcare, and dividend stocks may be safer. Hold cash or short-term bonds to take advantage of any dip. Remember, smart investors don't just guess. They prepare for both outcomes. Part 6. My take and prediction. Personally, I think the Fed will go for a small rate cut in September, around 25 basis points. Why? Because inflation is easing, but not collapsing. They want to give the economy a boost without completely taking their foot off the brake. So here's your action plan. 1. Watch the Fed's language in the next meeting closely. 2. Have a list of stocks ready for both outcomes. 3. Don't chase the rally blindly. The smartest moves are made before the announcement, not after. If you found this breakdown helpful, hit that like button, share this with your investing friends, and subscribe to Dollar Vest. Because in a market this fast, missing just one update could cost you thousands.